Have you ever wanted to invest in the stock market but felt completely lost? Don't worry, you're not alone. Most beginners quit before they even start, simply because no one explains it in plain English. But in this video, I'm going to break down the stock market so simply that by the end you'll finally understand how it really works, how you can get started, and how to avoid the biggest mistakes beginners make. And make sure you stick around until the end, because I'll share a step-by-step beginner strategy you can use right now in 2025 to start investing safely.
Let's be honest for a second. The stock market sounds terrifying. It's this giant, mysterious thing you see on the news. You hear words like bull market, bear market, recession, volatility. It feels like an exclusive club for Wall Street guys in expensive suits. People who spend all day staring at complicated charts, with green lines and red lines going everywhere. Maybe you've heard stories of people losing all their money overnight. It's enough to make anyone think, nope, that's not for me. I'll just stick my money in a savings account where it's safe. This feeling is completely normal, and it's the number one reason so many people miss out. The fear is real, but it's based on a huge misunderstanding. The stock market isn't a high-stakes casino. It's designed for everyone. You're probably already an investor and don't even know it. If you have a 401k or another retirement plan through your job, congratulations, you're in the market. The financial world makes investing seem complicated on purpose. People then pay high fees for others to manage their money, but the basic principles are simple. You can learn them in minutes. So, what is a stock? Let's smash this down to its simplest form. A stock is just a tiny, tiny piece of ownership in a company. Imagine a giant pizza, and that pizza represents a company. Apple, Tesla. When you buy one share of stock, you are buying one very small slice of that pizza. You are now a part owner. If the company does well, if the company makes a lot of money, if the company grows, the value of your pizza slice goes up. If the company does poorly, the value of your slice can go down. That's it. That's the entire concept. You're not betting on random numbers on a screen. You are investing in an actual business, real employees, real products, real customers. It's that simple. Now, where do you buy these pizza slices? You buy them on the stock market. The stock market is just a big marketplace, like an eBay, like an Amazon. But for company shares, it's a place where millions of people come together every day to buy and sell these tiny pieces of ownership. Most people think the point of investing is to get rich. They picture flashy cars, huge mansions, a life of luxury. But that's a Hollywood fantasy. For most investors, the goal is to not be poor when they're old. The real reason to invest is freedom. Financial security lets you make choices not dictated by money. Retire comfortably, travel, spend time with family, pursue a passion project. It's a long-term game, not a lottery ticket. This is where compound interest comes in. Einstein supposedly called it the eighth wonder of the world. It's interest on your interest. Your money makes babies. Those babies make babies. For example, invest $1,000 and earn 10%. You have $1,100. Next year, you earn 10% on the full $1,100. Over 20, 30, or 40 years, this snowball turns modest sums into massive amounts. Time is your single greatest asset. A 25-year-old putting in $300 a month into an S&P 500 index fund could have over $1 million by 65. A 35-year-old would need almost double per month to match it. They've lost 10 years of compounding. This isn't about picking the next Amazon. It's about consistency. Alright, here's the big twist. This is the one thing that separates successful investors from everyone else, and it's going to sound completely backward. The secret to success in the stock market is not about what you pick. It's not about finding the perfect stock or timing your entry into the market perfectly. Are you ready for it? The secret is to be boring. That's right. The most successful investors I know have the most boring investment strategies on the planet. They buy broad, low-cost index funds. They contribute to them automatically every month. And then they do the hardest thing of all. They do nothing. They don't check their portfolios every day. They don't panic sell when the market drops. They just let time and compound interest do the heavy lifting. The people who lose money are the ones who try to be exciting. They try to time the market, jumping in and out. They chase hot stocks they heard about from a friend or saw on the news. They treat investing like a trip to Las Vegas, and they almost always get burned. Your investment strategy should be as boring as watching paint dry. The excitement in your life should come from your hobbies, your family, and your experiences, not from your retirement account. The goal is to set up a simple automated system that works for you in the background while you focus on living your life. Go open that account. Set up that first small transfer.